Check, is this thing on? What is going on, guys? I am so stoked to be trying out our brand new format with you guys here today. I know a lot of you guys have probably been following us on X for a while, maybe following us on YouTube here for a while. We try to put out a lot of quality content in a variety of different platforms, and didn't feel like we were able to really kind of create that consistent community connection with you guys. So very excited for today for our very first crypto charge super stream. So thank you guys for joining from all different platforms. We're going to be replacing and sunsetting our two long form videos shows that we did, Monday and Wednesdays, Ask Maddie as well as After Hours. But we will be doing this here live on multiple platforms. Monday, Wednesday, and Thursday. So 3 times a week, we're going to be here with you guys. We're going to be talking about some cool topics today, specifically talking about Casper. It's one of those projects I've talked about for many years now. It's a project that's gotten a lot of hate. It's definitely a small cap that's gotten beat up. Price action has not been encouraging by any means, but we're going to be talking about some of the news today that I think is very productive, reviewing some of the technicals and some of the things that Casper Network has been working on from a tech stack perspective and not just from our personal feelings about price. And then we're going to take a look at the charts here as well. One of the things I love doing previously, which was just once a week on TikTok, was taking a look at the charts, taking your guys' chart requests. Now we're going to be doing that a few times a week. So I'm very excited for it, and very glad for you guys to be joining us here for our very first one. So as we kind of move through our topics today and talk a little bit about Casper, please feel free, guys, to leave some questions up there, and I'll review them after we kind of get a little bit further in through to our presentation here. I want to try to get through some material, but then we will go through and answer some questions, take chart requests, and all that good stuff. But you guys do need to know that we come from CryptoCharge.com. We go live Monday through Friday there every single day. We do a full review of the stock market, commodities, tons of crypto. We have our learning center, coin library, Discord community, all of that. You guys get 30 days free plus 50% off any membership with code YouTube. So please check it out there, guys. I would love for you guys to actually be a part of our program, be able to have strategy, have insights, and have that feedback loop to be able to ask questions. Today we're going to be talking about Casper, like I said, and one of the biggest developments that we've had most recently is a US listing. This has been something that we have all been asking for, all been waiting for. Now, am I ungrateful for access via Uphold or Crypto.com? No. Of course, I'm very grateful for that access. Just like I was grateful when XRP was unavailable here in every US capacity to have access to XRP on Uphold. It was very nice to have. Crypto.com, the fees are not great there either. It's also just a very incomplete platform. They don't let you manage everything on desktop. So for me, having one of the premier top tier US-based exchanges offering liquidity for Casper tokens is a very big deal. I tested today just with a $50 limit order, and I got excellent execution, very small fees. So later on, I can show you guys in a future episode how to set up your orders correctly, post only, making you guys setting limits, and maximizing the amount of actual, assets in crypto that you get, not wasting a bunch of it on fees. This changes a lot in that aspect of it. It also changes the overall liquidity availability here in the US when it does come time to the market moving a little bit more favorably, when people want to sell, when people want to make bigger purchases. It does make a very big difference. So alone, it doesn't make enough of a difference, but collectively it will. We're going to be talking about more of that here. But I also want to encourage you guys to check out, this is in 2 days on July 24. You're going to be having Mario Nafal interviewing Michael Stoyer, and this is going to be their crypto town hall. Really big influencer in the space, but I think he also brings up a lot of really good quality content. It's not just a bunch of rah and tribalistic nonsense. I'm very glad to see this kind of exposure. It's the exact catalyst you could hope for when you've had what you've had with price depreciation. You've had a muddied narrative in the past, and you've had a lot of focus and incredible things being built without the opportunity to really showcase those things. So please, guys, if you guys are available here during these times in 2 days, go check this out. I know that they're going to be, record this. You guys will be able to watch this later, but being able to at least join in on that roundtable is going to be very insightful for you guys, I think. Let's talk a little bit about what's been happening with Casper as a whole. Obviously launching on Kraken is going to be the biggest one that we're going to discuss briefly here, and read some quotes here. So while exchange listings are often viewed as retail liquidity events, this expansion represents a highly strategic expansion into the US market for Casper. As the network establishes itself as the infrastructure layer for regulated real-world assets and machine-driven economic activity, establishing a stronger presence as one of the world's most influential financial markets become increasingly important. This next part I think is important for you guys to understand just how big of an exchange Kraken is and how important important it is as a US liquidity provider. Kraken adds undeniable weight to the access point because its own direction closely aligns with the path set by Casper roadmap. Kraken Financial holds a Federal Reserve master account. Those 4 words mean a lot. Granting direct integration with U.S. payment rails, while parent company Payward pursues a national trust company charter with the OCC. This is a different level of liquidity than just a tier 2 exchange or even a DeFi protocol. Even if sometimes, let's say, the spread isn't that wide, this is a very high level of just USD liquidity availability for Kraken. So it's a great spot for us to have that listing. Here's a quote from Michael. Casper's strategy depends on both capable infrastructure and meaningful market access. We've spent the last 18 months rebuilding the protocol and defining a roadmap for regulated assets and machine commerce. Kraken gives eligible U.S. participants a direct way to access Casper and participate in the network as that roadmap moves forward. And I directly asked Michael multiple times, and especially in the last interview, you guys can go watch it on YouTube. We've had several interviews with Michael, and we didn't just start interviewing Michael when things were looking really, really sunny. We really, first of all, rolled our sleeves up and had him come and talk to us about what was happening with the network when, Casper Labs decided to depart to Hedera, now Prove AI, really changed overall just direction, as well as kind of what we saw through the X pages, what that consistency was looking like through that messaging. I asked Michael directly, because it was something you guys were asking, how are we going about US access? How are we going to get liquidity here in the US? And obviously said that he was, having those conversations, but it isn't easy like it used to be, just showing up with a ton of money at the exchange's door. The vetting process has become exhaustive, and there's a lot of competition. I really am very proud that we've gotten to this point since, Casper Labs stopped muddying the waters and that for-profit wasn't the forefront of what people assumed the Casper was. We now have a fantastic tech stack and access as U.S. citizens in a proper liquid market. I think that's very important. Casper has been building around a clear principle. Blockchain should become an invisible infrastructure layer, giving institutions a control required to bring regulated assets on chain while creating an experience that feels frictionless to users and practical for developers. Every major initiative in the Manifesto moves the network closer to that goal. And then finally here, just finish up with the Kraken listing. Casper's listing on Kraken therefore represents more than expanded exchange availability in the United States or Casper's growing ties with tier 1 centralized exchanges. It places Casper at the intersection of 2 markets that are rapidly converging: regulated real-world assets and machine-native commerce. We're going to talk about X402 micropayments here, which I know a lot of you guys have heard a lot about. XRP L has now a very robust suite for X402 payments, for AI agents. I'm very, very impressed with the progress we've made with X402 micropayments, not just within Casper, but industry-wide. We're noticing that there is a very big need for affordable agents that do not require subscriptions or an incredibly high level or barrier to entry to access those assets. Let's talk a little bit more about some roadmap-specific things. What's been accomplished, what Casper's going to accomplish. And of course, guys, none of this is financial advice, and I am not compensated by Casper or any project that I talk about here. Everything that I talk about on stream is of my own volition, of my own ideas, and my own overall research. This is not representative of any for-profit entity other than my own, which is crypto education at cryptocharge.com. So let's read through a little bit of the roadmap here. I'm absolutely not going to exhaust you guys with this. You guys can see I actually restrained myself and really picked a handful of things that I think we can focus in on so that we make sure that we're being concise here and have enough time to get into your guys' picks. So the first quote here is: the gap between what blockchains could be and what they actually are is not a mystery. It's a list. Developers can't use their existing tools. Users must buy a token before doing anything. Institutions can't comply with security laws on a public ledger, and AI agents have no payment mechanism that doesn't involve a credit card form. Agree. These are engineering problems and engineering solutions. Moving down a little bit lower here, we're going to read from where we've been. Casper 2.0, live since May of 2025, was almost a full rebuild. It introduced the ZUG consensus protocol with deterministic finality alongside a new multi-virtual machine execution layer designed to support future virtual machines without architectural forks. The release also redesigned transaction payments and moved the protocol towards a unified model where users' accounts and smart contracts are treated as the same first-of-kind class objects. So we're first of all unifying the process where all objects essentially are treated at the same level of security, value, all of those things, right? And also considering the interoperability layer with the multi-VM execution layer. It requires less retrofitting, and that is very much future-proof and forward-thinking as far as who's going to need to use or take advantage of my protocol without having to set up all of these very specific parameters to operate inside Casper specifically. And it also opens up the possibility to bridge further out, right? Bridge beyond just Casper being called on, but Casper also having the ability to create agents once called upon and execute on things within its own environment. Casper 2.1 cut block time from 16 seconds to 8 seconds and introduced protocol level fee burning, permanently removing transaction fees from circulation. Validators still earn error rewards, but the supply now has inflationary pressure built directly into the protocol. So block time from 16 to 8 is already massive. And we're also thinking about time to finality. It's very, very quick with the level of security, flexibility, all the components that make Casper great with its upgradable smart contracts. So just by mathematical definition, being able to complete with the same level of certainty twice as fast is absolutely massive. And the deflationary aspect, fees being taken out of circulation, is also huge because there is inflation, right? And most proof of stake networks have inflation. So I think it's very important that if we're going to have those inflationary aspects, that users feel like that when there is actual activity being brought onto the network, we're having tokens taken out of circulation that by de facto, creates a smaller circulating supply and can affect price long term. Casper 2.2 optimizes tokenomics for long-term sustainability, shipped in March 2026. A clean upgrade delivered on schedule, passed through on-chain governance by the validator set after in-depth ecosystem-wide debate. 3 protocol versions in under a year. The engineering machine is running. The question is to build what with it? Agreed. This is a ton of progress in just a year. You think about all these iterations, this is not a small feat. Let's read a little bit lower here. Let's talk about universal access. This is not a niche problem. The developer ecosystem runs on EVM or Ethereum virtual machine tooling. 17 originally non-EVM layer is added EVM compatibility in the last 3 years because ignoring this ecosystem means being invisible to it. Technical superiority has never been sufficient for adoption. VHS beat Betamax. x86 outlasted every RISC competitor for 2 decades. QWERTY is still here. Access matters more than elegance. After the manifest ships, the same developer opens MetaMask, connects to Casper, and deploys her contracts with a tool chain she already knows. Existing Solidity contracts work without modification. Her ERC20 token operates. The existing WASM or WebAssembly side SEP18 operations resolved to the same underlying protocol level token state, no bridge, no fragmental liquidity, one set of tokens across 2 execution environments. Think about, so for those of you guys who are into computer science or even just tinkering and hobby engineering, the flexibility you have with a Raspberry Pi, with headless Linux. That's the type of flexibility and connectivity that we're offering here, but also removing some of those barriers to entry for users by offering good quality SDK, software developer kits, instructions, barriers to entry, making sure those are nice and low. Let's move on here to our next piece that I wanted to talk about here, frictionless experience. A user in Jakarta opens a real estate investment app on her phone. She signs up with Google account. She sees a proprietary listing, fractional shares of a commercial building in Singapore, $50 minimum. She taps buy, confirms with Face ID, and knows tokenized equity in the fund. She didn't install a wallet. She didn't buy cryptocurrency for gas. She didn't sign anything. She didn't understand. She doesn't know. She's been using a blockchain and she shouldn't have to. Biggest takeaway is that a lot of people think, oh, I'm never going to use XRP. I'll never use Bitcoin, Casper, whatever it is. Agree. Most people will have zero knowledge that they're using any of those underlying assets, tools, or vehicles. Just like when you send money to your friend that has a different bank account in a different state, what does Zelle do? It completely eradicates that overall interface and what we're using and what charter banks did it stop at along the way. You never will know. And that's part of the process, is by design. You as the user do not need to know those things. We should make that experience continue seamlessly as we implement DLT solutions. For continuing here, under the surface, a stack of Casper manifest initiatives made this possible, but the user doesn't care about the stack. She cares that it took one tap. That's the bar, and right now, no public blockchain meets it. Almost every transaction on every chain requires the user to already hold a native token. This is the equivalent of requiring someone to buy stock in Visa before swiping their credit card. Multi-step DeFi makes it worse. Approve the token, wait, swap, wait, stake, wait. 3 transactions, 3 signatures, 3 gas fees, 3 chances for the user to give up, 3 chances for the business owner to lose a customer. How many times have you guys gone to just even check out somewhere, right? You see an ad, they show you an ad for something you want, and you're very excited about it. You go through the shopping, you get to the checkout page, and they don't have express checkout, right? They don't have PayPal, they don't have Apple Pay, they don't have anything that just lets you check out with one tap with your already saved credentials. The chances of you checking out at that point, unless your credit card is immediately in your hand, has dropped now to less than 20%. So we have to think about those same aspects when we're talking about the longevity of any DLT solution, not just Casper. That's why I like this particular article so much is because it highlights a lot of the issues in the space, not just putting Casper on a pedestal. Let's talk about institutional grade here. This is the longest one I have for you guys here, so please be patient with me on this one. We're going to move into a couple of use cases, and then I am all yours to talk about charts and answer questions. But I think it's important that we do a really, really deep synopsis on the important things that are relevant to this network, because I am so tired of people saying, oh, do you still believe in Casper? Oh, well, you haven't been buying it as much as of late. First of all, my DCA was really aggressive for a long time, but it doesn't mean I've stopped paying attention. I've lost faith. I've lost interest. Sometimes there are just technical opportunities that you have to place more weight on sometimes, or sometimes you wait for confirmation, and it doesn't mean that you don't believe in the protocol in itself anymore. So I'm trying to make sure that illustrate that as clearly as I can to you guys with some of these excerpts here without reading you guys this entire thing top to bottom, because it is a lot meatier than what we're talking about right now. So let's talk about this example. An asset manager wants to bring a $50 million commercial real estate fund on chain. On most blockchains today, that looks like deploy a token contract, build a separate compliance layer off chain, and hope nothing falls through the cracks. The token itself is permissionless. Anyone can receive it. Freezing a bad actor requires a custom smart contract that may or may not work as advertised. Regulators look at the setup and walk away. Simultaneously, a pension fund is evaluating blockchain platforms for a decade-long deployment. Their checklist eliminates most chains before the conversation starts. Quantum resistance, that's also another component that everybody's talking about right now. How do we become as resistant as possible to quantum computing and the advancements we've had in deep learning machines? On-chain compliance enforcement, transaction confidentiality, settlement finality, cost predictability. Most chains offer one or two. None currently have all five. The industry's answer so far has been pick one side. Compliance or privacy. Permission chains give you the compliance and kill composability. Privacy chains give you the confidentiality and make compliance impossible. As we've also seen, as a longtime Zcash holder, now only own 10% of my Zcash, it's not a zero-sum game. There is always going to be a fallback to one of the major advantages of something that provides, security or confidentiality like Zcash does, right? That orchard pool is still something we, to this very day right now, do not know if it has been tainted or not. And we won't know until we've migrated everything into Ironwood, and we need to wait long enough for everyone to try to redeem vouchers, and we need to see if that ends up being the case. I digress. The industry answer so far has been to pick one side. A compliance or privacy. Permission chains give you compliance and kill composability. Privacy chains give you confidentiality and make compliance impossible. I know we read this twice, but I said a lot there. Casper fills that gap. Last thing we're going to read here before we just talk about the actual two pieces that I think are important as far as upcoming dates that we need to consider. A logistic company runs a fleet optimization service. Third-party AI agents need to query its routing API thousands of times per day. Today, that means API keys, subscription tiers, invoicing, and billing department that processes payments 30 days after the fact. An AI agent cannot sign a subscription agreement. It cannot submit a purchase order. It cannot call a SaaS or software as a service API that requires a monthly billing plan negotiated by a salesperson over 3 emails on a Zoom call. What agents need is a per request payment. I call your API. You want 0.003. I sign a payment authorization. You verify it. You serve the response. Done. I want your milkshake. I come all over here, drink your milkshake. HTTP status code 402 was reserved for exactly this in 1997. It took 29 years for this payment infrastructure to catch up. Let's talk about some of the sequencing here. So we talked about those main 9 initiatives. Those are some of the ones that I talked about I think are really important. I would recommend that any of you guys that are interested in Casper to go read all this information. There should never be a rush of like, I saw this great presentation, I got to go buy Casper. This information is available to everybody, and a tremendous amount of other software related docs, SDKs that you guys can look at. There's a ridiculous amount of literature you guys can check out, but this is the more human focused one that I think is important. Let's talk about these two upcoming shipping dates here. So we have H2 2026. These form the foundation that address the most urgent competitive gaps: networking, hardening, EVM execution engine. And also we're talking about POC, production hardening underway, phase 1, identifying the registry and compliance engine, items with no protocol, team dependencies run in parallel from day 1. So just a lot more unity in relations to execution around EVM. The next portion here, H2 through H1 of 2027, these builds on the tier 1 foundation and unlock the user experience layer. Gasless transaction permits, the cryptographic tooling already exists, batch transactions and account abstraction. So this is really more about implementation than it is crafting the code and the technology in itself. And the 2027 being strategically important but dependent on earlier tiers, transaction privacy, post-quantum signing, continued maturation of native token registry, networking layer, and gasless infrastructure. So very straightforward. You guys can also go on the website and you guys can see like the much more detailed and granular breakdown. But EVM is going to be one of the biggest implementations, in my opinion, outside of X402, that's going to really set Casper up to leverage their existing WebAssembly model and upgradable smart contracts on a much higher level. Last thing on this actual piece here, guys, the engineering organization shipped 3 protocol versions in the last 11 months. The cadence is established. Formal protocol enhancements, or SEPs, for each initiative in the Casper Manifest will be published. Every architectural choice traces back to the 6 design decisions already live on mainnet. This chain that closes the gap between 500 million users and 8 billion will be the one that makes blockchain invisible to regular people, trustworthy for institutional capital, and natively useful for machines. The Casper Manifest is the plan to be one of those chains, not a theory. Construction plan with a strong foundation already poured. Absolutely agree here. Very, very excited that we have not only laid out a solid roadmap, but already have been executing on it up to this point and continuously forward. So many people will look at it and they go, well, what's a roadmap good to me for? Okay, well, if you don't have somebody communicating with you what their goals and intentions and forecasting what they want to do 6 months, 12 months from now, why on earth would you care about that protocol at all? Why would you care about the ecosystem? Why would you care about the investment? When you really think about when you're investing in the equity market, if you want to be a really good quality individual asset investor in the equity markets, you have to pay attention to what's happening with projections, with earnings, with upcoming expectations of earnings. What type of money and debt have they spent for X reward, and how long can this company deal with that level of debt to future projected profit before we start slipping into a below par situation in relations to valuation. I don't need us to have that exact intimate relationship with every single asset that we own. For most of you guys who don't do this full time, that's a lot. But I think when you look at the roadmap and you also look at the execution that we've had previously, it does show that there is a lot of improvements in the tech stack in itself. And that doesn't always translate into price, right? There's sometimes a very unfair delta between what we're seeing from a fundamental level and what we're seeing on the charts in itself. And I hold the charts to a very, very high value. It is my bread and butter. I've been doing technical analysis for about a decade now. So I do put a lot of weight on it. And Casper price in itself has been very, very rough. We've seen some significant new lows, but I'm completely staked up. I'm still very much locked in here. And if we do see some more meaningful turnarounds in Casper price, even some bumps back over, let's say, 0.007, I'll be very much interested in either starting a DCA again or even setting some limit-based orders. So, there's a lot of ways to go about investing, guys, and none of it's easy and none of it's fair and none of it's a straight line, I'll tell you that much. But to me, this is progress, and I absolutely believe in the core overall vision of upgradable smart contracts because it lays a foundation for a higher possibility of applications that don't require hard forking, retrofitting, making modifications that are less than pure, and really sometimes can degrade security and other important components that we find valuable in DLT. All right, let's keep moving here, guys. These next 2 are just going to be use cases, and I'm absolutely not going to slam you guys with a whole bunch of this because we've already been yapping here for a while, and I do want to see your guys' chart requests. If you guys have things you guys want to see on stream here, we're going to be taking a look at the charts, and I'm happy to do some technical analysis. We can take a look at stocks, crypto, foreign exchange pairs. If you guys are interested, that's where I got my start outside of maybe just taking a look at the stock market when I was younger. But please, guys, happy to take a look at any of that. So many of you guys have already heard about parking blocks, which is in relations to bringing parking on chain. Let's read a little bit here, and I promise this will be less dense and this will be much quicker. Parking is a simple practice. Vehicle parks, a fee is paid, revenue moves through operators and owners before reaching regulators, yet financial visibility remains fragmented due to siloed reporting and slow reconciliation, and that weak foundation limits scalable tokenization. Parking Blocks solves this by recording live performance data directly on blockchain, resulting in shared revenue and transaction history that supports daily operations while forming the basis of asset level finance and tokenized parking cash flows built on measurable results. Parking is one of those laundromat style businesses, right? In the sense of like, it's not necessarily the highest maintenance, but it's incredibly lucrative because of the amount of real estate that's required in order to offer those types of venues, right? Especially parking. And there's a lot of regulation that flows and moves around it, especially when you think about parking lots that are in big cities, parking lots that are around airports, where you have to be partially responsible for traffic flow and making sure that you're aiding in the overall fluidity of the infrastructure that the city has to offer. You can't just place a lot and not maintain, right? You have things that you have to maintain and keep up with. So current state of on-chain solution: the current deployment operates live on the mainnet of Casper network. Real parking facilities in the United States send production data through the workflow continuously, and on-chain records are updated without interruption. This phase covers a limited number of facilities by design. Early operation prioritizes stability and data accuracy, and expansion follows validation rather than ambition. Because scale without correctness introduces more disputes rather than few. How many times, if you guys have ever been part of a startup, I'm not sure if you guys ever have, but I've been part of many in my life, and they're a lot of fun. They can be very rewarding, and they also make you want to blow your brains out because they require a lot of thoroughness at the base level before you expand, specifically in solar companies. I've worked at over 6 different solar companies, doing a lot of data analytics and, sales and things of that nature. But the number one thing that I always saw, especially as solar was booming so much, people found a small amount of success in their very small model, right? They said, this is, how many people we have for, confirmation and for marketing and, for installation. And this is our overall installation pattern for the last 6 or 8 months. But what they don't realize is that there's a backup in the industry that happens eventually. You get, choke points with supply. There's so many variables that if you don't operate and try to address those things while you're still small and while you're still fleshing out your core offering and solutions, it can create a much bigger and more expensive issue to repair up the road. I've seen most of those companies close their doors because they did not get their base level product, base level system and operations flow down to a perfect science with a small team. If you can't do it with a small team, that means that something's wrong, right? It doesn't mean that you need more people. 9 out of 10 times, it is a flow or operational issue. So if you're able to take a small test amount, and then say, okay, now that we've done this for a certain amount of time, we can start repeating this on a higher level. That is always the safer level of implementation. So that should be true of business cycles. It should be true of building applications, and really anything that you guys do in your life, right? We should always be trying to take the small things and do them extremely well so that we're able to replicate those behaviors in other parts of our life at scale. Practical benefits such as transport recording of the revenue already exist. Transaction volume and data coverage will increase as new locations are onboarded and additional data sources connect. The workflow scales incrementally, and each added facility strengthens the data set and reinforces confidence in the system. Last paragraph here, I'm going to skip over some stuff. Parking is the first live implementation of large-scale revenue-backed tokenization for an entire operating industry. When parking cash flow moves on chain in a reliable and compliant way, ownership structures expand. Revenue participation extends beyond traditional operators and asset holders. Tokenized parking assets create new models for distributing income tied directly to measurable performance, and the model does not remain confined to parking. Industry built on a steady, quantifiable cash flow and multi-party coordination can adopt the same structure. Utilities, logistics, income-producing real estate, any sector where revenue is measurable and shared across stakeholders. Parking blocks is the introduction of verifiable economic infrastructure, and industry scale and scalable tokenization follows from that foundation. So like we were talking about, with being able to buy a piece essentially of, of a real estate fund, or things that maybe sometimes require a qualified investor status or an accredited investor status. This allows people to have greater immediate visibility into, first of all, day-to-day operations, cash flow. If there's any issues, it's easier for participants to notice those things earlier instead of on a delayed attestation report. We talked about something similar with XRPL and a physical mining company, physical gold, silver, looking for digs, right? And investors having more visibility and flexibility, as well as regulatory oversight on a regular basis. It allows for a much higher level of just transparency across everybody. Some people might not like that transparency, but it creates a more level playing field of fairness, right? As far as the toolkit is concerned here, I promise I will not beat you guys over the head with this. I'm going to read this top part here. We'll talk about X402, and then I'm happy to get into anything that you guys are interested in today on the charts. So talking about the AI tooling kit here, AI agents are brilliant digital assistants. They can code, they can scour databases, analyze markets, and summarize complex research in seconds. Yet the moment they try to act in genuine partnerships in the digital economy, they hit a hard wall. And the problem is fundamental. The internet wasn't built for them. It was built for humans. Think about how we purchase services online. You either either sign up, enter in billing details, pick a monthly software as a service tier, manage invoices, approve line items, and so on. The workflow makes sense for humans sitting behind a monitor, but autonomous agents, it's a broken loop. And AI doesn't want a recurring monthly subscription just to make a single API call. It doesn't want to negotiate with the sales rep to unlock that single data point. So with the Casper AI toolkit, it solves this friction by introducing a new stack that grants AI agents two primary capabilities on the Casper network. First, agents can now transact independently. They can pay for services, call paid endpoints, and interact directly with DeFi protocols. Second, they can build leveraging Casper's developer stack. They can write, test, and deploy new smart contracts with minimal human oversight. The launch of Casper's AI toolkit also marks a major milestone. It is the first shipped initiative from the Casper Manifesto, the network's multi-year technical roadmap published last month in May of 2026. So I want you guys to think about this really quickly here, though. First, agents can now transact independently. They can pay for services, call paid endpoints, interact directly with DeFi protocols. A lot of you guys have used some sort of AI chatbot tool in the future, right? You guys have used Gemini, Copilot, ChatGPT, Claude, right? You've used some formation of those, whether you've used the web app or the actual app in itself. A lot of you guys have used those services, and you'll notice that one, you either have to have a paid program to have good quality calls and be able to have it reason relatively decently and quickly. Obviously, as your workflow increases and you have your needs increase, you have to move up to one of those higher paid plans. But you'll also notice that there's a lot of restrictions, right? Restrictions in what kind of services it can call on. Certain images that it won't produce, even if they're not, let's say, not safe for work, but they still violate guidelines that, when it comes back as output from the cloud service says, nope, sorry, you can't give this back to the user, even though the task itself was already done. And then also the credit situation, right? You have to, commit to a certain plan and hope that that plan is going to accommodate, and you're not going to run into a point where you're overpaying for credits that you really don't need. You guys can actually run many AI services inside of Visual Studio, any type of execution environment like that, once it's set up initially, and then you can pay per call, right? So what you really could do with this is once you set up one of those environments, you set up an AI agent like this through Casper Network, and you're able to call on all kinds of assets and bring those into your own AI environment without having to rely on ChatGPT, Claude, etc. Okay, let's talk about X402. With X402, payments become an integrated part of the data request itself. The flow is simple. The request agent calls on a paid endpoint. The invoice, the service responds with an HTTP 402 payment request and a clear price. Image cost 1.2 cents. The settlement, the agent signs a payment authorization and the Casper X402 facilitator settles it on chain. The delivery service returns the data. There are no API keys to manage or corporate credit cards to link. Most importantly, no human approval step is choking the pipeline mid-request. So even if we're going to take and strip this back, you're like, Matt, I'll never have to use an X402 micropayment. Maybe not directly, but you certainly will use applications that leverage X402 micropayments and facilitate a lot of those things on your behalf without you knowing it, right? Just like we talked about with sending a Zelle payment, there's lots of things that happen in app where you're transferring things, even if you're playing games back and forth with somebody on your phone. There's a lot of little tiny calls that are happening that you're unaware of that make all of that move and work fluidly together. X402 is probably going to be the absolute biggest narrative for the next year, outside of just RWA and tokenized securities, in my opinion. Last quote here from Michael Stoyer, and this is from Chainwire in regards to the $150,000 agentic build-a-thon that they just finished. So they gave a nice prize pool for anyone who wanted to build specifically X402 specific projects. This is not the first time they've held a hackathon or a build-a-thon, but let's read this quote here to close out the fundamental side of it. No other layer one gives AI agents both the ability to transact as economic actors and to autonomously build new applications and productions on the mainnet today. Stoyer as CTO of Casper. Billions of AI agents are operating right now with no native way to pay for services. Every transaction still runs through infrastructure built for humans, not machines. Casper AI Toolkit changes that. Agents can pay per request in seconds with cryptographic proof. They can write and deploy smart contracts without any human in the loop. That's what the machine economy actually looks like. And with $150,000 in prizes and sponsored X402 usage for winning teams, we are putting our resources directly behind the developers that are building it. So if you're, again, looking at all the fundamentals and you're like, oh, rug pull because price looks bad. Oh, there was, a really big muddying of the waters over 2 years ago, I think now, right? With Casper Labs now, Proof AI, which is moving on to, Hedera and HBAR, which impacted HBAR price in absolutely zero way. Incentivizing and utilizing Casper tokens that are in the treasury for ecosystem development and expanding ecosystem. This is a great way to go about it. You have a new tech stack that you want to show off. You have a new focus with X402, and you want to encourage people to come build on your network. This is the absolute best way to go about that. So as far as a very small cap L1 that's still new in town, big picture here, I'm still very impressed with what Casper has to offer. All right. I'm ready to flip over for the charts for you guys. Unless you guys have questions that are specific to what I just discussed here, I'm happy to flip over the charts. Yes. All right, I'm gonna flip it right now. Yep, yep. Last one I see is from 215. Is that right? Let's see. This example. Nope, nope, nope. I don't see Dustin's comment at all here. I think I have a lagging comment stream. Okay, cool. From Dustin, what's up, brother? Casper listing on Kraken is amazing. Finally, a good access for US customers. Now, hopefully, when we get to see some turnaround in the crypto market, I think Casper could see a great gain up to at least 22 cents. What are your bull market targets? So first of all, Dustin, totally agree. If you're going to have any shot of something that's gotten really, really beat up, having a shot at seeing some, advantageous price action, having a very high liquid US based market is a great place to be for that. So to answer this question a little bit more clearly, and I have taken a look at some of these market cap areas of interest with you guys before. Sorry, we're going to take a look here at coin market cap first. It's important that we're able to look at the market capitalization before we figure out what's possible, what are our targets, and we have downgraded or at least added trim points to our overall setup and what our expectations are as we saw price depreciate. So we're also cognizant of that and pay attention that sometimes you have to adjust a little bit. We also added a trim point for Zcash, and big picture we probably could have not added that trim point for Zcash with how it performs so asymmetrically. But when we look at market cap, it's gotten down to $25 million. That's a really, really small market cap. When we look at the amount of money that's required, when we take a look here at the charts. So we're going to flip over here to the Casper chart here, guys. And I'm going to take everything. Oh, I'm not going to take everything away because I want to show you guys the important areas that I want you guys to look for here on the chart. So I'm going to come out here to the daily chart. So price is currently at an all-time low, and you're like, wow, Matt, all that presentation to show Casper at an all-time low. Right, correct. Unfortunately, the market does behave this way sometimes. And I've seen so many projects that really have fallen even deeper and harder with less blocks of longer-term valuation and liquidity. I've seen that example so many times where suddenly you get even let's say a 10, 12x in a matter of several days. One, because market cap becomes very small, and then sometimes you just see a liquidity resurgence as a lot of times whales will take advantage of that very small market cap and inject a lot there at those lows. So as of right now, we still need to see turnaround. The minor level that I want to see recovered is 0.0028. That's important that we recover above that. But I'm going to talk to you guys very briefly about something I covered on YouTube already, but it's an important part of the conversation. We know that market is trading at $25 million right now. What that tells you is what each multiple it requires from current market. That's why market cap matters. It's not saying this is the only thing that's possible. Too many people take that tribalistically and they're like, that's a stock thing, Matt. You don't know any better. Why are you even talking about market capitalization? It's a simple mathematical equation that says this is how many tokens are circulating. This is current market price, and that gives you market capitalization. So it tells you how much money is in the market currently, right? That's just all it is. It's a simple math equation that explains that. So what we can also look at is say in the future at some of these prices, we don't have to wait until we get there. We can just do the math of circulating supply times some of these targets in here. In order for us to get back into the super liquid pocket here, the first one's going to be right around 0.007 if we want to round up there. It's about $115 million market cap, right? So from when I wrote some of these multiples in here, price was trading a little higher, closer to 36 million. We've wicked there several times since then. So really, API 3 and Casper, I don't trip too much when I see the wicking and stuff in here, especially when the market just has been a little choppy still. We've only seen a handful of standouts, but we saw the market value Casper for a minimum of 0.007 to upwards of 2.5 cents for about 530 days. Prior to that, for about 770 days, we saw the market value between 400 million and almost $1 billion. The common denominator between that is 2.5 cents. So you can see that we valued it between 2.5 and 0.007, 2.5 and 0.007 as the lower bound, and then we have 0.06 or 6 cents and 2.4 cents as that upper bucket, and then 2.5 being that dividing line. So really collectively you're looking at 2.5 cents mattering to the market for 1,400 plus days here, 1,500 plus days. So when I consider that, I know that that's still the major point that needs to be reclaimed. But if we were to reclaim at the minimum 0.007, that opens up a very big liquid pocket from even that area. So let's call it from 0.007. We get upwards of a 260% move to that pocket opening up. And then if we were to break over the 2.6 cent pocket, we get another 140% move to that almost 6 cent area of interest. And of course, the juiciest run is between the 6 cent mark and the 22 cent mark, where we saw a massive double top. And we also saw Casper valued for about 300 days between 22 cents and almost 6 cents, right? So this is one of the main things why, yes, it's been very disappointing. It's very discouraging. It's still very much downtrend. You know, you do from current market require a, what is this, 5x or so, 500% return from current market in order to get back into that very first area of interest. But remember, with the market cap at only 25 million right now, and we're asking for a 5x, right? We're asking for well under $200 million to come into the market in order for us to be able to just recover that very minor area of interest. I've seen it happen with even things that I don't think are relevant in the mainstream right now, like Super Farm and lots of other tokens that just dove super deep down in the previous bear and have just seen an incredible resurgence without any major changes as far as fundamentals are concerned. So my main targets still are going to be taking a nice trim at 22 cents. I'm absolutely going to be taking something there at 22 cents. The 1.618 fib using the more recent 21 high and the more recent lows in here puts us around a 37 cent mark. You have the 2.618 at a 60 cent mark, and then you have a full extension target at almost 96 cents or $1. My targets previously were more heavily oriented towards $1. I'd love to be wrong. I'd love to see price, you know, blast right through my initial trims and take profits and get right up there and really even up at some of those prices. We're asking for 15 billion, $16 billion at $1. We're asking for around $10 billion at the 60 cent mark, 6 billion around the 37 cent mark. And again, at our first actual TP target, around 3.63 billion is the required market cap for us to get there. For some of you guys who are just getting involved, right? You just start building a position a day. You have a ridiculous average compared to maybe the average Joe that's accumulated 0.007 and above. Maybe you introduce a trim schedule because you guys can see that the multiples here do offer that for you guys, where you could take a nice trim at 2.5 cents. You could take another trim there at 6 cents. You guys can take those trims as you guys find appropriate. The reason that I do not want to get caught up in those small moves in there is because once we reclaim one liquid pocket, you have a very big chance of that liquidity offering moves towards the next major ceiling. And those gaps become very lucrative in between there, to where I'd be more interested in swing trading and then even buying back on those breakout back tests. So this is absolutely one of those turnaround bets if you guys want to be involved in this, right? This is not something where I'm like, you know, XLM or Ondo, where it's like Ondo's clearly bottomed out. We've seen the roundedness, we've seen the breakout back test, we're seeing the flag break here on the daily, right? It's not like XLM where you've reclaimed a major pivot zone and you're seeing that flagging behavior also set in there. Solana trying to get its initial foot up. Ethereum that's also shown some initial tenacity over its key resistance, now trying to treat it as key support. It's not one of those situations. What I'm pointing to is a very small market cap opportunity with strong fundamentals, a proper L1, upgradable smart contracts, compliance, all of those things baked into the cake. And right now you can own it for a very small piece and, you know, be able to purchase it directly on Kraken. So again, it's not financial advice. I make absolutely zero money if you guys buy Casper, sell Casper. If you use Kraken, I don't care if you go and use any of my links at all. This is just for you guys to have a educational understanding of my overall thought process and how I'm approaching the market. Okay. Appreciate it. Break out the cocaine and hookers. You know what? You got to call them up. We got to go splitsies on this. Everyone send one X402 micropayment. And we'll call up the best that we can there. But yeah, I'm very excited that we finally got a US based listing. Michael promised that he'd been working on it. A lot of people started to get frustrated and angry, and you know, this is what people said that they needed to see in order to take the project seriously. So I'm very curious to see, with, you know, just kind of market conditions with price where it is now, if people still feel that same way, if, you know, if Casper Network and if Michael has delivered on the things that he said he was going to deliver on. Looking back on a lot of our interviews, you know, and we did several long form interviews, I really think that he has delivered on a tremendous amount of effort from him and his team, you know, with optics, with keeping people updated, with you know, reaching out to get media releases and news coverage, you know, as far as the actual tech stack development. Incredibly impressed with the integrity that Michael and his team have expressed in these last couple of years here. It's in fact made me more bullish than I was when I first, you know, found Casper and, you know, I saw a lot of the proprietary value. I think you have a cleaner, more minimal tech stack that has a much higher offering, a team that actually wants to deliver on a roadmap, and a future that looks extremely bright. You know, all that's required is a couple $100 million for the market to start treating this very differently. And I know that's a hard thing to stomach, hearing like, we only need to see this 5x, and or when we get that 5x, that's what's going to create more liquidity. How does that happen? It really comes down to how market makers make these markets. They walk in these liquidity blocks, which is why we saw with Casper hundreds of days of valuation between walls and ceilings, or ceilings and floors. That's intentional. So when they yank price below or above one of those levels, and you haven't really even back tested it, that becomes an open block that should be tested. So I'm very, very bullish on, let's say like World War III breaks out, we see one tiny relief rally in the entire market, Casper comes and tests 0.007. Like, I think that is the minimum viable just from a technical perspective, based on what we've seen with breakdown, what we've seen with previous retests. We've seen much more strong retest, and even though they were rejections in the past of those previous ceilings, you've seen strong tests in there. You haven't seen that strong test since we broke below here in December of last year. You haven't seen a proper test. So I think it's overdue. I'm very bullish, and been here this whole time. I didn't go anywhere, baby. What's up, Crypto Charge? Is Bitcoin going to drop below 60K anymore? Let's go ahead and take a look here at Bitcoin. So let's talk about what's going on with Bitcoin. And by the way, guys, at cryptocharge.com, I cover this stuff Monday through Friday. So here's some of the stuff you guys see we cover. We cover the equity markets. Take a look at the Dow Jones, S&P, NASDAQ, any crypto-related stocks that I think are useful. Been looking at Coinbase, BitGo. We've also been keeping our eye on Intel. It's one of the chip plays that I think has a little bit more room to the downside. I want to pick up for better price. Take a look at the metals. Take a look at the 10-year dollar oil market. And then we get into crypto. So this is something, if you guys are interested on a Monday through Friday basis, you code YouTube for 30 days free, because I really try to provide you guys a tremendous amount of bird's eye view value. When we take a look here at Bitcoin, one of the things I think that people are really hanging their hat on is, amount of time that a bear market needs to last. This is what happened in previous cycles, and this is my preferred methodology of bear market bottoming. So this is what I'm going to stick with here. I think something that is very interesting that we hadn't seen in previous cycles, that still is following something somewhat similar here, is you look at this previous high in here from 2018, 2017, right? Everyone knows that high. Everyone and their mom finally learned about crypto, and it's what really put, Coinbase and a lot of other exchanges on the map. What did we end up doing when we created this market bottom in here? And this is where I think a lot of people think we're at right now. A lot of people think that we're right about here somewhere. This is where people think we are within current cycle and relativity, okay? That's where people think that we are right now. And here's why I don't think that that's equally as high of a possibility as the bottom is most likely already in. When you look at where we ended up bottoming last cycle over here in 2022, we basically tested that previous high and just shy here of that retrace rally here from 2019. I mean, within spitting distance of that level, we're talking about $1,300-$1,200 here, right? Very small amount. You created that accumulative bottom, and you saw those breaks higher. You technically left a tiny bit of imbalance here between 33K and 38K. I digress. We can leave that be. What's different this cycle, though? How is the market behaving a little bit differently? When we look at these previous highs in here, right? We look at the highs here from 21 and 22. We already talked about this bottom over here satiating previous cycle high. So we're not even thinking about that imbalance. Here's what we're seeing right now. You guys see this flag in here? This is something we didn't see in that previous cycle. So do you guys see that you got, a nice rally, but then that capitulation from 2020 really changed a lot of that. By the time you actually got up here to the highs, you consolidated a tiny bit, and then you just blasted right through. So you already don't have that behavior here, right? Because what we should have seen, if we're going to say this is identical to last, we would have seen something like this, and then pull back, and then the breakout. But we saw something different this time. So what that's created is a couple of things. One, it showed that when we broke out here the first time, look where that wick landed us here. It really took out a lot of liquidity from those local highs in here. I would say pretty equivalent to what we saw with this bottoming behavior here with these previous highs from 2018 and 2019. Very similar, right? And this also created a long-term flag structure in here. This was a long time to consolidate in here. This was 220, 230 days before we broke higher. Now, am I objectively going to ignore that this is rounded, that this spells a lot of the same characteristics of a head and shoulder structure that could break down further? No, I'm not going to bury my head in the sand and say that's not something that I'm paying attention to. What I do think is very interesting is that if you were to try to apply that logic and say, like, we need to go and see a sub 48K price, which I'm seeing a lot of analysts talk about, and not even necessarily analysts, I'll take that back. I see a lot of people yapping on social media about we need to see a sub 45K, 48K Bitcoin. It's what has to happen because this is what's happened seasonality wise in the past, which, by the way, correlations in relation to seasonality have changed dramatically since everyone wrote those 4-year cycles as Bible, as well as supply shock stuck theory. But one thing we're seeing here is that we're building right now, we're trying to build on top of these previous cycle highs, which is exactly what we saw in previous cycle. We have all the support for 200 days plus that did technically poke a new high and then consolidated for a tremendous amount of time after that. And then we're settling on top of that right now. The other thing that we're seeing when we zoom in, look at this behavior in here. So that magenta line is the 200-week moving average. The green line is the 50-day. 50 days, the shortest I look at on a regular basis. 200 weeks, the longest I look at. Above that, you guys see here in the orange and the green, that is going to be the 100-day in blue and the 50-week in orange. So I obviously was getting a little nervous as we started to spend a little bit of time here below the 200-week. We started to definitely deviate back here in June. We saw a little deviation back here in early June. We look in the past, you've seen some minor deviations like you saw here in August and September of 23 after breaking back above it and moving significantly higher. You treat it as resistance heavily in 22 through 23. You look in the past here, deviation, but quick recovery back here in COVID. And then here in 2019 and again, February 2019, two major respects of the 200-week there. If I were to flip out to the more aggregated chart, right, because we have more history that we can look at here, and if I take the 200-week back further, you guys see back here in 2014 and 2015, you've got a double bottom there with very small violations of the 200-week moving average. We started printing that here in 2013. So when you look at all the examples of the 200-week, you have some examples of oscillation, but it generally has been treated as a very strong support or resistance area. You looked at when we broke over here in September of 23 or October of 23, and you look at where we are now. This is our first time interacting with the 200-week since 2023. So first interaction was technically here in June. So we've been interacting with the 200-week for about 48 days. And we've seen longer interactions with the 200-week. But what's positive right now in the short term is that we're now trading back above the 200-week and the 50 days. So the 200-week in itself is what I care about. The 50-day is a nice to have. It's a nice extra. Here's what I expect here in the next short term. Sorry, guys, let's flip down to the 6-hour frame. One thing that I think is encouraging is you are seeing the inverse head and shoulder form in here. You also have this imbalance that was created, and that's something that a lot of people are not paying enough attention to right now. I'm going to come out to the 8-hour frame. So when you have a level like this that was treated as support, this was also where we created distribution in here, that roundedness. You look in the past here and you keep dragging that box over, you can see examples of resistance, a little bit of contention here in January of 26. So that level breaking like that, and then seeing this classic roundedness set in here, the momentum back over the MAs, the possibility of at least a short to midterm rally towards 74K and likely even closer to 76K is incredibly likely. And the reason I say this, I always try to tell myself, if I'm bullish, let me look at this through looking through the lens of a short seller. Where's my ideal entry? Not obviously selling the damn top, but I see there's a trend intact. I see that there's downtrend. Where's my ideal entry? It's buying the imbalance. It's buying the broken level that has yet to be tested, because we should be applying that same logic and ideology to bullish setups, right? You broke out. Should you buy on the breakout candle? No, you should wait for it comes back to you, retest, right? And that gives you the confidence that you're buying a level that's being treated as support. So last thing I'll show you guys here with the Bitcoin chart and why I think that's also a reasonable area. You take a look here at the Fibonacci. We go swing high low here from May. We get the 618 to the 702 behaving between 73 and 75K, which are really, really juicy pockets that people pay attention to, especially the 618 in here. So I'm very, very at least short-term bullish on Bitcoin and a lot of alts right now. Lots of other alts are showing really positive signs, including, like I mentioned, Ondo, XLM, Solana, Ethereum. They're making really productive moves. We also have been taking a look at the Ethereum Bitcoin pairing. Holy smokes, is Ethereum making some sneaky moves on that pairing? It's showing that Bitcoin's made some good recovery progress, but who's actually leading the recovery progress out of the two of them? It's Ethereum, right? I think that's a very interesting but also encouraging element that people are overlooking right now, because they're waiting for Bitcoin to print a 10K God candle before they start paying attention to alts. We're already getting whispers from the alts as to what they want to do, right? And the answer is at least short-term recovery. Needs a miracle rather than a... Let's go, baby. Thank you guys for making our first super stream so massive. This has been a lot of fun. I'm excited to keep doing these later this week. But from Tanner, ZXR needs a miracle rather than a Kraken listing. I think this points back to kind of the earlier nuance that I added to my excitement around the Kraken listing, but that on its own doesn't itself, make a project successful or guarantee bullish price action. And I've said that even of projects that have had good listings elsewhere, but when people are like, what do you think about the Coinbase listing? I'm like, it's great, but like it doesn't guarantee anything, right? You still need to be paying attention to the technical picture. You need to, have conviction that the fundamentals that you've studied are strong enough and competitive enough and proprietary enough to compete with other things in the space. Because I'll have you guys bring on projects in the past where, you know, someone's had me look at something and they're like, what do you think? And like sometimes it'll be like similar market cap as Casper. Sometimes it's like just brand new pricing, but they feel very bullish on it because it's new. You know, and that conviction really changes pretty dramatically, even if they don't have a strong understanding, sometimes no understanding until I've presented on it to them, but they've already purchased the bag prior to that, right? So I agree that we shouldn't lean on a listing and say this fixes all of our problems. But I think that if you pair the recovery that I think we're about to see, at least even short term here in the crypto market, with the new listing that provides a higher level of liquidity, you know, in overall U.S. access liquidity, it can change a lot. I've also pointed on the Casper chart many times to the weird wicking behavior that you see on Casper. It is so strange how Casper wicks out. You know, it tags the 50-day all the time and then rejects, even when it throws downside wicks. They're so violent and they're consistent. They're consistent on the daily. They're consistent on the 6 hour. Even when I look at other individual exchanges, I look at, you know, MEXC, I look at, you know, crypto.com. You look at some of the volume and the candles in there, it'll still look very similar. So I think that if you consider a higher liquidity environment in an exchange that has market makers that want to provide a higher tier of liquidity, you're going to see a cleaner chart, if that makes sense. That again does not equate to immediate price action, but when you see less wicking in the candles and you see more sustained closes, that gets traders excited, right? Traders don't absolutely love the long-term volatility, right? They want to see that we're actually making some progress, like you are with Bitcoin here. You have some candles that are very wicky, but you have a lot of candles that close very cleanly. So as market cap increases, we'll definitely see more candles that close more cleanly. But I think that this could be one of those elements where a high tier one exchange and this type of liquidity changes the way that the chart prints altogether. And I've seen it happen in the past. Ron, I'm paying the girls in Casper. We'll have to set them up. We're gonna have to let them know that they need to make sure that they have their EVM set up so they can accept their Casper set up in a smart contract to make sure that nobody gets gypped on either side of it. Sam, an update on Telcoin would be good as mainnet is set to launch soon. I feel like everyone asks me to cover Telcoin all the time. I don't feel like price action was that great last time I looked at it, but let's take a look. No, I'm not thinking of Telcoin. I'm thinking of something else. This actually has a pretty decent uptrend to it. I did take a look at this at some point because there's a fib on it. So initial launch pricing was bad, right? This is a good example of good idea, bad market timing. Over here in January of 2018, bad market timing, right? What was the total decrease there? 99.7%. Even over here to these 2020 lows, 99%. You know, that's a great example of just bad market timing. Here in January 21, you get a full reversal and a new all-time high here. So never take this as a blueprint of like this happened, so this has to happen in another element, but just please respect that market timing does impact a chart super dramatically, and it doesn't always indicative of supply issues or overhang or bad fundamentals. What we've done since our peak over here in 2021 is we've built a pretty decent floor of support. You had a lot of resistance up here at 0.006. You had a pivot zone that's right in there, right around 0.003. And up here at 1.4 cents, all the way up towards 2.8 cents is going to be that major area of interest that I think is probably the most liquid pocket I would be targeting if I was not looking at an extension-based target. So let's dial in one more level here, which is basically current market. Because if you look where we are right now, this is the dividing zone between that lower band of support that was key support from 2022 all the way through September of 24, right around 0.001. Pretty much trading around where we talk about a lot of other assets right now, trading at 0.0018 as of time of recording. But what we've seen is, looking left to right, if this holds, a beautiful series of higher highs and higher lows. One of the things that was discouraging short term is this breakdown in here. So you had resistance here, a little bit of a contention there, a lot of support over here. And when you broke below this, you immediately rejected it and treated it as resistance, as well as rejecting the 200 week, which had been acting as support up to this point. So we're sitting on a very liquid pocket right now. Even when you look at the candles that printed here before that retracement rally, those printed that way because of the pivot zone that's in here right now. So I'd say this is very much oversold. I would say this is a decently safe spot as far as structural support goes to consider making some additions. If you wanted to get cheeky, you think the market's not bottomed out, I'd be looking at 0.0013. But you could use any of these major levels in here as your targets to the upside. If you were just getting involved or you wanted to trim out, be looking at 0.006, and I'd also be looking at 1.4 as well as 2.8. Those would be the main areas I'd be looking at. If I take all this away and we look at our grand Fibonacci from 21 all with lows here set in 23. If you look extension based targets, it puts you closer to 10 cents. And you can see that the 236 aligns with the imbalance that was created there from that support break at 1.6. So those are the things that I'd be watching for there. Very curious if Tel lists their market cap off the bat, 176 million. So a lot bigger than Casper, APA3, and others that I know people say it's not possible, but you know, that the reason this number matters is 176 million times whatever multiple to get to that area of interest, right? That's a 700% move. So it'd be 800% times that 176 million. So more money is required to make that same move happen. Still small. I think in my head, anything under like 250 million is still a pretty small cap. I'd say that it still qualifies as something that doesn't require a lot of gusto to get to some of the desired prices. But you said the mainnet is launching soon. Let's see if that is a news thing that's available. Is it just Telcoin? Am I dropping the ticker wrong here? There we go. It's the top here. Why are they listing stocks first? Come on, CoinMarketCap. What are we doing here? We're CoinMarketCap. Let's go to their website, see if they talk about the mainnet. Banking the internet money. Telcoin is revolutionizing global banking by uniting blockchain, technology, digital banking, telecommunications. Is this just a banking app essentially? I want to say that this is a banking app. I'd be curious though, like what is it about Telcoin that interests you so much? Like what are they doing that like no one else is really doing on a high level right now? I did briefly talk about this on another stream. Bringing regulated trust on chain, EUSD digital cash is issued under a formal banking charter and continuously regulatory oversight from the Nebraska Department of Banking and Finance, going control the custody process, banking grade operations, peer-to-peer digital cash payments, modern financial services. Okay, so I mean, I feel like we're kind of doing a Western Union here, but utilizing EUSD as kind of the bridge in between. And I'm definitely oversimplifying this because like we don't have time to do a full project breakdown here on stream, you know, on the fly, and not monopolize everyone's time. But those are some of the technical things I look at. But let me know if I'm missing something on Telcoin there, and like I need to dig because they got something cooking. Keep up the good work. Long is better than short right now. We are on our way up. Appreciate it, Gizmo. And everyone's, you know, entitled to their opinions. I don't expect everyone to, you know, strictly listen to one analyst or, you know, to take anything anybody says as Bible and not do some research and, you know, really try to capture a lot of things. But I've looked at a lot of elements even outside the technicals, and I've been looking at, you know, what we've seen historically, especially in February, and then again we saw some of this behavior displayed later this year with RSI reaching some of the most oversold levels on RSI that we've seen since COVID. Looking at Feared and Green Index coming down to a 9 for Bitcoin, and really only a handful of times in history we've seen that reading plus or minus 3, you know, which does point to a very narrow set of circumstances. You know, I think that you pair that with what we've seen with stablecoin advancements, with master Fed accounts for crypto exchanges. There's just so much working for us, both fundamentally as well as technically, that say we're so overdue for longs at this moment. Like I think that even if you're a professional swing trader, day trader, I would probably laugh at you if you said I'm shorting the market right now. I think that's a really, really foolish take to have, especially if you're not looking at something that's on like a 5-minute chart or something, right? You're looking at trades that offer, you know, some breathing room, offer a little bit of, you know, actual reward to the upside. I think you're a fool to be short right now. So yeah, my money's on long for sure. Big bag of Casper on deck. Love it, love it, love it. And it's really, like I said, guys, if you are going to go on Kraken and you're going to buy it, which again, this is not financial advice. I do not make any money from any of the sales anywhere, whether you're buying Casper or any other asset, is make sure that one, you're setting a limit order when you go to buy. I know market's tempting, but like set an order within even just a very small fraction of the area that you're interested in, set a limit, and then also set it to post only. You'll spend so much less money. Sometimes it takes a little longer to fill, and it'll only fill in parts. But like that's the best way to build your bag and not give away a bunch of your, you know, capital and fees. People get impatient and they have to do market, unless I really take that back. There's really no reason for you to ever do market, ever, for any reason. You either should be doing a DCA, you should be doing limit-based orders, whether you're buying or selling, and especially if you're selling. It's easy for you to drum up a TP plan and, you know, chunk that out and have those TPs set. But getting off track here. XRP, XLM. I know a lot of those go hand in hand, and you know fundamentally they do, considering Jed McCaleb co-created both of them. But yeah, we'll take a look at XRP and XLM real quick here. So let's take a look here at XRP. I think that XRP is probably one of the most deeply valued L1s right now, as far as legacy L1s and bigger monolithic L1s. Now, market cap, remember, guys, vastly bigger. Market cap is 71 billion. So that's why I try to like tell people when they're like, they think, oh, well, 200 million, you want Casper, you need 200, $300 million in Casper volume to, or Casper market cap increase in order to get to those prices. Like XRP is at 71 billion at one of the lowest prices it's been at in a year and some change, right? Trading below $1.20 right now. So remember that those multiples we're talking about, right? For XRP to get up to here, let's say $2.32 would be a 2x move from here. We need $70 billion to enter just the XRP market, right? It's very possible. I'm long XRP. I'm bullish XRP. It's the first asset I've ever owned in the DLT space, but I'm trying to get you guys to understand the spectrum of that value there. But when we take a look at XRP, I think one of the things that people could not get over was the fact that $2 or so was holding decently well. I don't think we're coming back to the previous lows. My biggest gripe with this entire chart this whole time. And by the way, I'm in from sub 50 cents average price. So like, why on earth would I ask for these things if I already was in profit, right? One of the things I noticed is when we had this long consolidation in here and you look left, there's a lot of examples of this being resistance, support, resistance. Historically over here, the topping in 2018, like 70 to 90 cents or so has been super important to the market. What did we do here in, what was this? In November of 2024? We broke through with zero regard for a back test. So what happened was a false sense of security got built up here. And I told my team, I go, this is not the best deal. It's really not right now. I said below at least $1.30 would be my minimum viable, but I would want to see a retest of this 70 to 90 cent pocket in here. Why did I need to see that happen? These double tops in here in 2022 are actually more liquid and more important, in my opinion, than this topping behavior over here from 2021. I knew it was a very high possibility that we would come back and retrieve that. You look back in here as well, it still coincides with the general crazy up-down impulse that we saw here in 2017, 2018. So what ended up happening? Our first drop below structure in here in January of this year created a perfect imbalance fill back down to that $1.30 region. We tagged the 200 week here as well for the first time since breaking over here in November of 2024. So that, at least for me, said, okay, at least we've done some proper rebalancing in here. The cliff is now smaller. And that's my biggest takeaway, is not that I don't believe in the asset or I'm trying to step over dollars to pick up pennies, but when I know that there's a gap that represents at this point, so let's say that you were insistent on almost $2, that there's a cliff of about 30% for a big market cap like this, a big monolithic L1 with this big of a market cap, that's a lot of risk, right? That's a lot of downside risk that's on the table. So one thing that we're noticing right now is that we're trying to get back over the 50-day. We're trying to get back over the 200 week here, not quite yet. But if we're going to see the behavior that we've seen in Bitcoin, Ethereum, etc., there's very high likeliness that we'll reclaim $1.30. This is where I'm going to suggest to my team flip to limit-based ordering again. So right now, this is a heavy DCA below $1.30, even $1.20. Once we flip over this level, I'm going to say turn the DCA off, change this to limit-based ordering so we can capture orders on the way up and try to capture bullish momentum, to which will open up $1.89. But I think that the downside risk at this point has become very minimal. If we were to see one quick flush to the downside, I think immediate downside risk is about 18%. That's the downside risk. And at that point, you look at where we would be encountering at that point, these double tops in here, this wick in here. What I prefer had seen from the get-go, a flush of 72 cents and then higher prices. Yeah. And in fact, this would have given us a stronger structural piece of evidence in theory to be able to work on. So I think that if you guys are interested in XRP at all, please do not squander it. Do not get greedy. The downside risk is so minimal at this point. It actually introduces more risk by trying to wait for an exact bottom. If you look at the high here from 2018 and 2019, 2020, that was set in low. Came in for a retrace here in 21 towards the 50%. You treated the 236 as resistance here in July, and we barely squeaked a new high, right? Like barely. Like, what is this, a new all-time high for ants? And it wasn't just XRP. That's one of the things that's also so different about this cycle. Bitcoin made a new high, some new alts made new all-time highs, but the high quality chains that, by the way, are highly built on. Ethereum is the #1 smart contract platform out there right now, right? No, #1 in total tokenized RWA out of any chain, and barely squeaked out a new all-time high. That tells me something's happening market-wise, and not that crypto in itself is falling apart, or that you picked the wrong coin. So I think that if you want to look at some of the Fibonacci's in here, the trim zone is still going to be 540. I think that some people are interested in that. That opens up like a 400% move from current up into that full extension closer to $13, $14. Is about 11, 12x from here. I do have other targets. I have about 21, 22 on the website as one of our targets. You look at the last cycle high in here and you look at the clusters and kind of see where that overlap is, you get like 22 to 26 between some of those further Fibonacci extensions, of course, in respective nature to where they came from. But you see that 5, 8, and like 11 to 13 is repeated, and then you get this cluster between 22 and 26. So I would be treating that 22 to 26 as more like the upper bound. If that doesn't get hit this cycle, you're not crying about it. I plan on keeping some of my XRP long term, to be able to stack against it, to be able to borrow against it without paying taxes, right? There's a lot of advantages to holding a long term bag if you believe in it, but want to relieve enough of the position so that if you still believe in XRP, wouldn't you want to buy more of it at a lower price using some of your freshly found capital? I would hope so. But those are the things I'm thinking about with XRP here. Muscle and health. I'm still buying Casper here and there. Right on. And that's the approach I've tried to get with our team is like, I don't ever want us to like be in that falling knife situation or like you've created a set of impulses, you haven't created clear support or reclaimed a level yet, and tell people who have already, DCA'd really heavily down, they have other projects that need their attention that they can, be a little bit more actionable with to lower those averages. Like it doesn't have to be a requirement that everyone buys, consistently every day, or you're a bad person for not lowering your average or even taking a financial breather. I think that one of the biggest mistakes that we make as a whole is we overextend ourselves where we don't set a budget. I'd much rather hear someone is buying here and there as they're able to, as they see fit for their risk appetite and for their portfolio. It makes a lot of sense to me, and I like to hear that. It's an ISO 20022 compliant token. That's always bullish. I'd agree with that to some extent. Anything ISO 20022 compliant just means that it's compliant with the current messaging standards that Swift operates under. So for international money transfers, that's all that really means. It doesn't mean that Swift is going to use them, right? It doesn't mean that they're going to be the primary chain or roadway or whatever, but it means that they're eligible to potentially be a participant in ISO 20022 related messaging transfers. Bobby, everything is just noise until the Clarity Act passes. I expect fireworks 2027 onward. I know a lot of people are waiting on the Clarity Act right now. I'd love to see it just absolutely rip through the House and the Senate and just be done. It's been a long road. Bipartisan bills like this suck because both sides could care less about the actual contents of that particular bill that actually pertain to the industry. It's all about how do we stuff more money into foreign countries' pockets and blow shit up, right? That's really what a lot of these bills entail. Like there shouldn't be a reason why this bill is as long as it is. If you look at the contents of it, even if I'm sure you had chat do an analysis on it, I would say that probably more than 75% of the bill doesn't pertain to crypto at all, and it's just an unfortunate components there. But hopefully for a pass because it absolutely would tee us up for a really, really bullish next year. Utility bull run loading. Agree. I'm very, very excited on these upcoming phases here. Now, I'm not promising no volatility. I'm not promising that we won't have chop setbacks. Lots of things can impact what we expect out of a timeline, but I see that there's a lot of utility focused projects that are taking the spotlight right now, and it's currently not the next hot meme coin or NFTs or anything like that. It really is projects that are focused on the problems that everyone is cares about right now, including micropayments, agentic services, things like that. Atlantic long-term returner. Maddie, what are your favorite top favorite projects that have full circulating supplies released? Are you concerned with Casper's infinite supply? So you kind of have to with most proof of stake models, except that there isn't going to be a ceiling. And even projects that are capped, that's not a guarantee. You can have a modification, or if an amendment is proposed and a quorum is reached, you can have a change in total supply, right? So I look at those metrics as metrics that are most intangible in front of me at the moment. It's not that it's a guarantee. What I don't want to see is a major supply overhang issue, meaning let's say circulating is 30% of total max supply. I absolutely need to dig and figure out where the hell the rest of that 70% is sitting. Is it in an escrow that won't be unlocked for 5 years? Is some of it for ecosystem development, and that's going to be parsed on a ongoing basis? Is some of this going to be changing or going to the team, and the team has unlocks in the next 6 months? Those are the things that I care about a lot. But I wouldn't say that, especially now with the way that this space has evolved, that a increasing supply is kind of part of the process unless you're going with a very, very traditional POW model. Inflation is baked into most protocols at this point. So I wouldn't say that I have anything that I'm going to recommend immediately based off of that, but you should pay attention when there is a big delta between circulating and total.
Maddie, I'm going to pull up Atlantic's last question here. I think afterwards you should tell
Yeah, absolutely. So let's go ahead and read this last question here before I get off track. So Atlantic, to answer your question here, how and where do you stake Casper? So hope I'm not lagged in here. We're gonna find out. No, I'm on Chrome, so I shouldn't be. So you're going to go to CSPR.live. And please, for the love of God, do not click the easy button, the Uphold trying to offer you right now to be able to stake right in their platform. They are offering that as a service, and for such service, they take a very nice commission. All validators do take a fee, but it's still going to be a nominal fee in relations to what you're going to pay if you stake directly through Uphold. Do not be lazy. It is worth the 3 clicks. So there's 2 ways to go about this, right? When you go to the top here, you can click sign in. You actually have more than 2 options, but the Casper wallet, there's a native Casper wallet, so you can drum one of those up. Lives right here in the extension. There's an app too. It's pretty good. So if you guys do not have a cold storage wallet, highly recommend you guys spin up the Casper wallet here. You guys can connect with MetaMask, but I would recommend if you guys do have a Ledger device, do it with Ledger, because once you set it up, it's very easy to manage. It's the highest security you're going to possibly get with it, and you don't have to have additional extensions and things in your browser that live there. You can just sign in and sign things with your hardware key itself. Once you're signed in, you're basically going to go over here to wallet. If you haven't transferred it in, you're just going to grab your public address and send it over just like you would send anything over, and you click delegate stake. Once you click delegate stake, which I'm not signed in right now, and good thing I'm not, you would select the account. If you have multiple accounts, there's no reason to unless you guys want multiple accounts. You select a validator. When you select from the validator list, it'll show you all the different validators available and the fee schedule. So look at fee schedule, look at all that stuff before you make a decision. And then you need the amount. You need at least 500 Casper, which, by the way, at time of recording, my $50 celebratory or christening Kraken purchase, just for the sake of value, I think I got 32,000 Casper for $50 today. So you should be able to meet this pretty quickly. And the cost of the transaction is 2.5 Casper. So a few things to finish up on this, because I think it's important that we come full circle. One, APY is dynamic, and that changes based on TVL and other things. So right now it's 10.7%, which is great, which means you're able to offset some of that inflation. If you do not stake assets that have staking as an option and inflation is involved, you are almost intentionally letting the trade work against you. Do not ever do that. Please, anything that you guys have that's available to stake, HBAR, API3, Casper, get them staked up. Now, I know that some of you guys have, time restrictions that don't work for you. You also can do liquid staking with Casper here. We'll probably cover that on a future episode, but make sure that you guys are completely staked up in the protocol here. Once you guys have everything in there, it's auto recompounding. You guys have a 14-hour lock and a 14-hour unlock, meaning that you guys will take 14 hours to fully bond to the pool and 14 hours to unbond from the pool. What's nice is once you're bonded in the pool, every 2 hours you get those rewards, and there's no lockup on the rewards. So you want to undelegate. Within 14 hours, everything you had delegated will be available for withdrawal, including those rewards. But I would encourage you guys, unless you're doing a whole bunch of crazy day trading, just park it in here. My personal strategy is once a week. I treat Sunday like DCA day. Anything that's on an exchange and needs to be moved over, I just move it over to my cold storage, stake anything needs to be staked, and I move on to it. So don't make it a daily task to where it's so cumbersome that you don't want to do it anymore, but just put it on your calendar. It literally takes no time at all, especially once you know what your public address is. You can just whitelist it in Kraken or whatever, and you could just send it right over, and then it's just a couple of clicks to actually get it staked up with your Ledger or with your Casper Signer wallet, or it's not Signer wallet anymore, excuse me, it's just Casper wallet. This is the upgrade. Again, I've been following this project for so long, I'm starting to confuse the old terminology from old sunsetted projects, and these ones are much better. The old Casper wallet wasn't as fluid. This is far more fluid. You guys can also set up a Casper.name here moving forward if you guys want, where you guys can basically have a short form name instead of your long address there. But that's how you go about it. If you guys do need help with that, you guys can jump in our Discord, and we're happy to look at the screenshots in our tech support channel and help you guys along there if you guys need help with that stuff. Cool. So let's take a pause on kind of our session for today here, and I want to tell you guys a little bit about what we got coming on later this week. So we have, first of all, at cryptocharge.com, we try to provide you guys a tremendous amount of value. So we go live Monday through Friday. This is the live show from earlier today. My team will always get the first update, the condensed update, the update that's relevant to investments, key news for the day, as well as any member questions that were asked get brought up on the show. You tag me the day before, Matt, can you cover this on stream? Yes, I will. So make sure you guys are taking advantage of that. This is Monday through Friday. We have our daily edge here, which is a written summary of everything we talked about. For those of you guys who are short on time, we have lots of learning sort of resources. If you guys watch nothing else, watch this 47-minute video called the Consistent Investor Strategy. Allows you guys to just get very basic insights as to, like diversification, different verticals in crypto, how, DCA versus limits. Here's the 8 ways you can deploy. Here's why setting aside dry capital is important. Here's how you set up exit strategies, right? It won't make you an expert, but if you guys have no understanding of that, this is the best 15 minutes you're going to spend. Lots of other resources in there as well. In our coin library, which is being revamped right now, lots of changes, including a light web app here. You guys can click into these and you guys can see, for example, let's go ahead and take a look here at Bitcoin. You guys can see the suggested entries. So it'll tell you where buy limits should go, where dollar cost averages should go, short-term profit takes for those of you guys who are looking to swing trade. Targets, this target was already hit from last cycle, so I'm leaving it as such. You guys can take that as well. And then we have a very short summary of written analysis here without overcomplicating it while still being technical enough. You guys got also access to our Discord. That all comes at $65 a month and the 30-day free trial if you guys use YouTube. What we're doing moving forward here, and you guys are part of the very first super stream. This is 5 years now of doing crypto charge, by the way, guys. It's not something that we just started recently. I'm not just, bright-eyed and bushy-tailed about this space and hoping to, garner your guys' trust and interest. I've been doing this professionally full-time for 5 years now, and I've been studying charts for over a decade now. This is something I care very much about. So we are moving the direction of our platform very differently here. I am going to be live on our website like I always have been, Monday, Wednesday, Thursday, and Friday. All streams are going to be at 1 p.m. PST, so more people can join live. We're also going to be doing these super streams 3 times a week. So we're going to go Monday, Wednesday, Thursday. We're going to do super streams like this. We'll have a topic we cover. We'll take questions, take a look at some of the charts you guys have. And then our newest segment that's going to be included on Friday, only for our members, which I'm so excited about. We've been doing something called Technical Tune-Up Friday for a couple of years now, where we basically go through the charts like we always do. And then in our Discord, we have a chart request channel where people can request charts. And we cover those tickers after I'm done with my main analysis. And we're still going to implement that because I know not everyone is able to join the call. But what we're introducing is Crypto Hotline Friday. So you guys are going to have the opportunity to join the live, be able to call in and ask your question live or chat back and forth with me about some analysis. And again, that's of course for members only, but on your trial with those 30 days, you guys can also check that out if you guys are interested. So excited about these changes to our program, to our flow, to be interacting with more of you guys here on YouTube, X, TikTok. I think it's really going to be a great relationship for all of us. So if you guys haven't, please give us a follow on whatever platform you're on right now. Make sure you guys get notified. We post a lot of good content on X as well. I'd say we're probably one of the most consistent channels out there in relations to value through all mediums. And I would challenge you guys to take that 30-day free trial with code YouTube and tell me differently. All right, guys? All right. Otherwise, we're going to have another great stream tomorrow. Hope to see you guys there, and absolutely hope to see you guys in the Discord before Friday to see if you guys are interested in that hotline setup.